Testing. Okay. Bitcoin just hit that next line that I've had on my chart for quite a while now, which is these relatively equal daily lows over here. Yesterday we came very, very close, but pulled back up. We did the same thing that we did last time as well, um, although even closer yesterday. That was what we did over here. We had this monthly low and came down 3 times and then pushed right through it. So let's see. What next? Well, it's quite likely that we're going to pull back up before going lower. That's just how price moves. And if we zoom out, let's zoom out. Look at the weekly candle here. All right, so we are inside this dealing range, from this dealing range low to that dealing range high, all-time highs to the low of this retracement here. And it's very reasonable that we're going to retrace before going higher, retrace beyond the 50% into what's called optimal trade entry. ICT concepts is what I use, as I understand it. That's in the range of a 62 to 79% retracement. 70.5% is smack in the middle there. So that's very likely that we would retrace to that range before going higher. As I've talked about, the most important concept to understand from ICT is the market moves for only two reasons. So that is to grab liquidity, to offer balanced prices, or to offer fair value. And you could learn about that on YouTube for free. All his stuff is on YouTube, as well as countless other people who have derivatives of his stuff or reteaching his stuff. So if you're interested in studying that, let me know. I'm happy to guide you, so you can save some time running around. The full range, going back to when we hit the low of 15,000 and change, from this full move, the whole range from here up till here, equilibrium of that range, that means a 50% retracement of that range, is at 70,876. 70,876 is also below this swing low here that is going back to April 2025, not that far away. Yes, April 2025, we briefly touched on 74,000 and change. Okay, so I remember that 74,000. All right, we came down, touched it. I had let's stay focused. So and then we came back up. There is a decent chance. I don't know how likely. There's a decent chance that we do come down and take out liquidity below here before going higher. That would put us close to the 50% of the entire range. We also have this intermediate range here, and that is from this swing low to the all-time high. From this swing low to all-time high, that puts 50% of that puts us at 88,000 approximately. Okay, so 88,000 and change, that would be 50% of this range. And optimal trade entry here would be from 62%, let's say 70.5%. That would put us a little bit below here. So by coming down here, we will be rebalancing all these bullish gaps called BISIs, buy-side imbalance, sell-side inefficiencies. They're bullish for value gaps, and grabbing liquidity down here. Is it necessary? Is it for sure that we're going to go down to let's say the low 70s? No. Is it likely? Yes, it's more than possible. It's definitely likely. Is it, what's the likelihood? I don't know. I really don't know. And that's why, we can only take it step by step. But my eye is on this down here at 74,434 as a possible draw on liquidity, meaning price is possibly heading straight there. Now, what else could the level be? This over here, this is a bullish order block, and it's quite possible that we come down to the bullish order block somewhere in this range between around 86,000 and 78 or so, in that range. That may also be where we find support and turn back around. If we do that, we'd have to watch and see, are we just retracing for a little bit of time before going lower, or are we actually reversing? We want to watch and look for clues of that. Because if we do come down to here and then retrace higher, What we'll have done is created additional sell side liquidity, which creates additional reasons to come down. And what we'll probably need to see is a wick below, like we had over here, where we wick below this sell side liquidity to the left before going higher. And so when we come all the way down here, if we do, which again I think is likely, but I don't know how likely, we we'll have to see how the chart actually plays itself out. Now on its way down though, we're probably not going to drop all that distance in 1 or 2 days or 1 or 2 weeks. These are weekly candles. So what's likely to happen is that we will make a move lower and then retrace a little bit higher and then make another move lower. And at this point, we might, I would expect that we're going to retrace into this SIBI. Let's update this. This should be, now we've turned it into a bearish inversion for value gap. So that would be inversion for value gap. And that's on weekly. And we might come in there, find some resistance over there, and then go lower, or perhaps this one, which overlaps with this newer one. Possibly we would come all the way up into this bearish mitigation block, which is this candle here. That is a certain kind of order block. So we're likely to retrace up into this area and then continue lower. That's what I'm seeing. If you have some Bitcoin and you're in it for the long term, do not panic. This, whenever I talk to people about buying Bitcoin, I say two things. Number one, only buy what you can afford to hold for at least 5 years and watch it possibly lose 80% of its value or more during that time. And number two, study it, learn about it. Because if you're panicking, if you're nervous about it, then you don't understand it almost certainly, or you put money in that you need in the next 5 years. And that certainly wasn't my advice. All right. Let me know if this was helpful and if you have any questions.